Most people trade stocks the same way. They wait for a good setup, they click buy, and they hope that they got a good entry. What I'm going to show you in this video is how I actually enter my stock trades every single week, and it's not about buying the shares outright. I use something called a cash secured put, and the easiest way to understand this is basically as a paid limit order. Once you understand how to use this, you're going to stop chasing your entries, you're going to stop rushing your trades, and you're going to start letting the market come to you. So in this video, I'm going to break down exactly what a cash secured put is, how I set them up, and how I use them to enter my stock trades. I'm going to talk about outcomes in a different video after this one. In this video, I want to focus on how to actually enter a trade from start to finish and, the whole process behind it. So you guys are gonna have to look out for that next one coming soon. So let's start with how most people buy stocks. For the duration of this video, we are going to be using IREN because I just put in an order today, and I want to show you guys exactly how this works and how sniper of an entry we got and how you can do this too. So most people just see a stock that they like, you hit buy, and you're immediately exposed to your timing risk. If the stock pulls back after you buy, you're instantly underwater even if the idea was right. If you jumped in at $54, which we're currently trading at $54.41, by the end of the day, we're dropping to $52. You're immediately in drawdown. The solution to this might just be a limit order. Now, a limit order would help with this because you can place an order, say at 50 to get filled, and maybe the stock bounces right off of 50 right where the support level is right here. And then we continue to the upside. And yes, you are in profit, but there's still one problem with this. You don't get paid for waiting. And this is where a cash secured put comes in. So what is a cash secured put? I'm going to put the AI overview up here so you guys can read it while I'll explain it. A cash secured put in plain English is basically an agreement. You choose a stock that you want to own, you choose a price you want to buy it at, and you're agreeing to buy 100 shares at that price. You're setting aside the cash to do so. And for making that promise, the market will pay you up front. Now, something important here is that you have to do this with 100 shares or you cannot sell this put. This is why it's called cash secured. You can't do this with 99 shares. You can't do this with 101 shares. It cannot be with one share. It has to be with 100 shares. So on a stock like IREN that's currently trading at $54 per share, you would have to set aside, let's see if we wanted to buy it at 54. So 54, don't mind my chart writing here, times 100 equals $5,400. Gosh, I'm gonna have to speed this up in the editing. I cannot. So you would need $5,400 to run this on IREN at its current price level. So whatever strike price you're choosing, multiply that by 100 to get how much cash you have to put aside to do this. Now, obviously, you are going to be limited if you are starting with a smaller account size. So you are pretty limited with what stocks you can choose, what kind of premiums you would be earning. But as you grow this account, you will be obviously getting the fruits of your labor where you can run this on a lot more expensive stocks that you like. But back to how a cash secured put is a paid limit order, which is the key concept here, because this is the mindset shift here. Instead of placing a limit order that pays you nothing, you can sell a cash secured put and get paid to wait. So if you had this $50 strike price, you can have that same entry price as you would with a limit order. You would have that same patience, but you would get extra income for actually setting that order. And if the stock never reaches that price, you don't enter the trade, but you still get paid for it. If it does, you buy the stock at the price that you already wanted and you already chose. And this is why I call this a paid limit order. So how do I choose the stock? Because I do not sell puts on random stocks. You're going to have a full checklist for this. The short version of this is, would you be okay owning this stock? Would you be okay holding it if nothing happens for a while? And does this fit my long-term view? If the answer is not yes to anything here, I don't sell the put. The strategy only works if the stock selection is solid. One of the easiest ways to think about this is, would you be comfortable holding this stock for the next 10 years? If there's any hesitation behind that, you should not be doing this. Once you find a stock that you like, in this case, we're going to be using IREN, how do you actually choose an entry price? The price I choose is the price I would happily buy this stock at today if it pulled back. So explained simply, this is below the current price, usually near an area of support or consolidation, far enough that I'm comfortable owning this stock at this price. I'm not trying to squeeze every dollar out of premium. I'm just trying to get a good entry. And the key thing here is, if assignment feels scary to you, the strike is wrong. If we had a strike at $50.50 and the price is coming straight for you and you are nervous about that, your strike is in the wrong place. It is too close to current price for your comfort level. Now, a rule of thumb that I use, because I am playing with a bigger portfolio now where I am very diversified across a bunch of stocks, is I aim for 1% per week or 4 to 6% per month, depending on how the week is looking. This always depends on, the volatility that's in the markets, and we can make a whole separate video on that. But overall, I'm looking for 1% on every single position I take. So if I'm allotting, say, $10,000 to my portfolio, which we did today, what we're going to be doing is looking for 1% earned on that premium gain per how much we're putting in. Now, the most important thing here is time and the expiration, because time is what makes this flexible. This is where we can hop over to an actual broker like Interactive Brokers, where you can see the actual options chain and see how this works. So basically you're choosing how far in advance you want to put that strike price for. So the first one, obviously today is Monday. So if you want to hold this for 4 days, which I did, honestly, it would be 5 because I set this up on Sunday night. So we would have Monday through Friday being 5 trading days. So basically I'm making this agreement for only 5 days. So if the price of the stock, came down to my level in those 5 days and got assigned in those 5 days, then, I keep all the shares of the stock. But if it stays above that level for those 5 days and expires above the level that I chose, I keep the premium and I don't buy any shares at all. Obviously, there are pretty aggressive strikes here, as you can see from where we're trading. We also have earnings right now going on for IREN coming up this week. So the implied volatility is a lot higher. And that's something I want to touch on a little bit later in the video when I show you guys my entry for this. Now, the things you need to remember here are shorter expirations equal faster results, but they're more active. Longer expirations, anywhere from 3 to 4 weeks or anything more than that, is more room and it's a lot less stress. So I don't force a specific return per se. I choose time based on how confident I am and how the market feels, and then I can reverse engineer that with my 1% per week rule. Something very important here is one size does not fit all. I'm a very active trader. I'm on every single day, watching this stuff. So I can choose a lot more aggressive strike prices with a shorter time of expiration because I'm always watching the charts. For someone that's maybe not as active on the charts, you would maybe be more comfortable doing 2 week, 4 week, and even longer periods of expiration because you have a lot more room to play with and you have a lot less stress to manage this. So what does this look like in real life? In a normal week, I will set a few of these up on Sunday night. I will place my trades. I know my prices and I know my exposure. So once they're set, I don't really have to babysit them and I let time do what it's designed to do. So in a case like today, where we have IREN earnings coming out Thursday, February the 5th, we are on February the 2nd right now. So we do have a little bit of run up to that earnings deadline. And once that's released, we are going to see a big spike in IREN either to the upside or to the downside. But this is a stock I'm very passionate about. If we actually zoom out here, you can see its current trading history, and it's become a very, very popular stock. But this is a stock that I want very, very low cost average on. With this implied volatility being very high because of earnings, I was actually able to sell a cash secured put this morning for 400 shares at the $36 level. So my strike price is right here at $36, meaning IREN would have to drop over 30% to assign me shares. Now, this is a stock that I'm passionate about. I want to own in the long term, and I want to have a good entry price on. The last time we actually had this was around $51, and then we sold a covered call a little bit higher. I earned a good percent gain. I earned a fat premium on this, but I missed out on like a 14% rip that we had right here, which is really, really unfortunate because you do cap your gains when you exit this kind of stuff, which I will talk about in a future video. With this in mind, I don't own any shares right now, so I do want a lot more shares at a much lower price. Now, you're telling me I can make that 1% goal, $36 per share, and that is 30% lower from where we're trading now. Of course, I want to be filled on this trade. So obviously now, if we go back to the options chain, that isn't going to be the same at all. There is decay, meaning the more time runs on in the markets, the less premium we're actually going to get as we get closer to the date. So obviously mine was expiring at the end of this week. So if we go back to the options chain right here, you can see expiry at February the 6th, which is this week ending. And if we look for 1%, we actually don't see it anymore because it's no longer there. The decay has already taken care of this specific option strike price, which means I was very fortunate to get a fill at this level. So what I'm basically saying here is if IREN drops all the way to my level and stays below here by the time February 6th comes around. So this is very, very important. Once February 6th finishes, that day finishes, if IREN is trading at or below that price, I will be assigned my 400 shares at the $36 mark. Now, you're telling me I'm getting paid to make this order. So I got paid around $200 to $250 for just making this order, because that's what you make in premiums. I ended up earning around $250 for this trade. Obviously, like I said, this has decayed a lot, so you would have to go a lot higher to actually do that at. So I would say right here would have been a good level where you would earn $45 per contract. So if you sold another 4 contracts here, 45 times 4 is what you would be earning for that. But since I did this early this morning when volatility was very high, I was very fortunate to get an entry at this level. So now the two outcomes of this is when February 6th rolls around and the day is over, if IREN is still trading above this level, I will have just earned $200 plus for free, and I don't have to buy any shares because it did not expire at or below my strike price. But if IREN absolutely dumps through earnings and comes below and we expire below, meaning February 6th has finished, the day has finished, and we are trading below my strike price or at my strike price, I will own 100 shares at this level. So this is the example we're going to be running with. And when I record my next video, I'll actually talk about the exit plans, which is a whole very different concept. But I wanted to make this video strictly about entries. But this is more of an exaggerated example because we are going through earnings. But something that would be a little bit more normalized would be around 5 to 10% lower that you could sell a strike at. So if IREN is currently trading at the $54 mark, and we said, okay, what's around 5% lower? That's going to be around $51 per share. You could sell a cash geared put at that level when volatility isn't exactly the craziest. So you would be looking something along the lines of, here for an entry price. And we do have a lot of upside on IREN. We're about 41% off those highs that were created from current price action. So in a case where we have, regular volatility and it's not completely exaggerated because of earnings, you are looking at strike prices a lot closer to the current price level. You have to be very, very careful, especially when playing earnings. This is only something I would say, pros should be that have been doing this for a while. So myself, I would consider a pro with this at this point. So I'm very happy with taking a trade like this, but this is definitely not something beginner. I just want to show you the exaggeration of, how far in strike you can actually pick up a stock for that you actually want at a lower level. And this little concept of a paid limit order using cash geared puts, I'm literally getting paid to make this position. And this isn't the only one that I do every week. I'm doing this across probably 5-6 other stocks currently, which means I'm making over $1,000 per week in premiums right now. I do this with the intention of either getting assigned, meaning I want to own the shares at a lower price, or I'm doing this with the intention of, hey, we're pretty far away from price. I'm definitely not going to get assigned if anything happens on this. And I'm very much okay with just collecting premiums. Now, something I was talking about in my last video was Hood. I was like, oh, you know what? Hood's definitely not going to make a crazy drop at all. And this would be a good level to own at. Oh my gosh, was I ever wrong? And Hood absolutely tanked today. We are down 10% today, which is absolutely wild. I do think this is because of the earnings that are coming next week. So, the implied volatility is very, very high here. But this is a stock I'm very passionate about. So I am kind of bag holding these shares at the 108 average strike price, even though we're trading at $89 a share right now. I think this does have a lot of upside. Again, this is just my opinion. Do your own research, please, into any stocks that you plan on doing anything with. Personally, I will be holding this until I do make a profit on it, and I will be selling covered calls, which we will talk about in the next video. So in a case like this where I'm in a swing trade and it's in drawdown like this, I would set a level that I would say, okay, you know what? I would sell for a loss, or I would wait till the shares come back into a profit, where I would inevitably sell a covered call, meaning I'm capping my shares gain at some point and getting paid to agree to sell my shares at a price. It's basically just the inverse of a cash secured put, calling it a covered call. So we will be talking about that in a future video. But in terms of how this trade is going, we are pretty heavily down right now. I will probably hold this through earnings and see how this goes, and then I can make a decision on how I want to be holding this, or if I want to be figuring out an exit plan. And this is actually how I enter stock trades. I don't chase price, I don't rush my entries, and I don't need to be right immediately. I choose the stock, I choose the price, and I get paid to wait. So once you understand this, the stock trading becomes a lot calmer. In the next video, I'm going to break down the outcomes of how I actually exit these trades with a very, very tactical approach. In this case, I did want to show you guys just the entry on IREN in particular and how you actually set these. Through the options chain, you can actually check, how much you're getting paid via premiums. I've already done a few videos on how to actually, execute this from start to finish on the actual IBKR app. So if you guys want to see that again, we can make that. If not, just go check my past videos. Other than that, this is more of an entry video, how I actually enter my stock trades very consistently and how I get paid to enter my stock trades overall. In the next video, we are going to be talking about how to actually get paid to exit your trades. I know this sounds absolutely insane, but I promise you guys, this is what I've been doing for 2 years now. You guys are going to absolutely, eat this stuff up. Once you actually get into the rhythm of doing this, it is so much more consistent than day trading. And I don't really know a lot of other people on the internet that talk about this. So I think that you guys will find this very, very interesting. If you guys found value in this video, make sure to leave a like, subscribe, leave a comment down below with any comments that you have, or, if there's something you want me to break down specifically. But with that, we'll see you guys in the next one.